Hi, Brian Mahon here, founder of Igloo Insurance, where we offer transparent risk advice to business owners and families. Today, we're diving into everything you need to know about workers' compensation insurance. What is it? How does it work? Why does it confuse everyone during audits? Don't worry about it. Let's break it down. So, workers' comp, you might have heard of it referred to as work comp, is no fault insurance that covers employees who are injured on the job. No fault means the employee doesn't need to prove that the employer was negligent. If they're injured during the course of work, they're covered. Here's the catch though, workers' comp is extremely state specific. Every state sets its own rules and benefits, requirements, and how coverage is structured. So it's best practice that as soon as you hire in a new state, you need to add that state to your policy. Some states like New York have big fines if you fail to do so. Some states even run their own monopoly work comp funds. The monopolistic states, there's four of them: North Dakota, Ohio, Washington, Wyoming. I actually started my career in Ohio. So if you operate in any of those, you must buy workers' comp directly from those states. There's no competitive business insurance market in those states. At the same time, if you hire in those states, you don't want to forget about stopgap employer's liability coverage through something you add through your general liability or commercial package or business owner's policy. It kind of fills in the gaps left by these state-run programs. So think of work stopgap as really an umbrella for your monopolistic state work comp. So what does a work comp policy look like? If you look at the declarations page or maybe page 2 or page 3 of your workers' compensation policy, it should say something like bodily injury by accident, $1 million each accident. Bodily injury by disease, $1 million policy limit. Bodily injury by disease, 1 million per employee. You could have $500,000 there or less. Often businesses either just buy the full million or buy the limits based off their customer contracts. It's not that much more expensive to get the $1 million limit, so you might as well. You're only talking maybe a couple $100s more typically. So this protects you if a worker sues for damages outside of what workers' compensation pays. So what are the benefits of workers' compensation? Well, the system is designed to work for everybody. Here's how. Employers get predictable injury costs. No more, guess the legal bill every time somebody gets hurt. Employees get quick access to medical care. There's no lawsuits needed. They get back to work. They're taken care of if they can't work. And insurance carriers reward safe companies with better rates. Typically, there are four types of workers' compensation benefits: medical bills, lost wages, rehabilitation, and even death or survivor benefits. So, what are employers' responsibilities in the workers' compensation system? By law, employers have to provide a safe workplace, warn of any potential dangers, use safe tools, hire competent workers and coworkers, and enforce safety rules. It's all part of what they call the duty of care. What about independent contractors and employees versus independent contractors, right? Who actually needs to be covered? Here's a good rule of thumb. If you, the employer, control how and when someone works, they're likely an employee. If they use their own tools and control the outcome only, then they're likely an independent contractor. So still, if they don't carry their own workers' compensation, you could be on the hook. If you're hiring independent contractors, you always want to ask them for a certificate of insurance. It'll save you money come audit time for your workers' compensation, and is just best practice. Infamous workers' compensation audit. So here's how it works or is supposed to work. You give your insurance carrier an estimated payroll when you start a workers' compensation policy. At the end of the year, they check the actual payroll. So if you underreported, you'll owe money. If you underpaid, you get a refund. There's checks and balances on the hires and fires throughout the year. Audits can also double check your employee class codes or how they're defined in the type of work they do. If they're an office employee or a roofer. They also look at contractor payroll that might look like employees. And of course, they catch any layoffs, raises, or new hires. These work comp audits can be done in person, online. And if you ghost the insurance carrier, you just don't respond to the audit, they guess. They create a guesstimate of what they think happened in your business, and usually it's going to cost you more than if you would just comply. So how is workers' compensation rated? It's mainly based off payroll, how many employees you have, full-time, part-time, how much you pay them, and these risk class codes. Again, 8810 might be your clerical office. I think it's 8742 might be a salesperson. All these jobs can be broken down by a work comp class code. Now, what most insurance agents won't tell you is there's two other factors that go into what you pay for workers' compensation. One is any scheduled credits. So oftentimes brokers can negotiate with underwriters and get a credit added to your workers' compensation. 5%, 10%, 20%. It varies by state. They also can add, insurance carriers can really use different writing companies. So you have, insurance carrier Ocean, and they have a writing company River, writing company Stream, writing company Puddle, and different tiers within those writing companies in their insurance carrier. So you might want to double check what we call the loss cost multiplier, the LCM. These are publicly available and they're published every month, but really carriers typically update them yearly. And the LCM gets multiplied. So those different rating companies may have a high one, a middle one, and a low one. When they go to rate the policy, typically an insurance agent will ask you what your FEIN number is, where your employees are, what state, their job titles or class codes, the payroll, when they were hired, if they're remote or office. One important thing to note is executive level payment, right? Most CEOs kind of considered a salesperson, right? But these states let you cap their payroll. You're not insuring the $1 million salary for your CEO. Maybe in workers' compensation land, only $160,000 of that is actually getting attributed to paying workers' compensation. So here's some quick tips before I let you go. How to stay ahead of the workers' comp game, right? Consider pay-as-you-go workers' comp. So there are technology solutions where you can integrate your payroll software and your workers' compensation policy. So as you hire folks and bring them onto payroll, the workers' compensation policy is automatically alerted. You can also reach out to your broker. Maybe your broker reaches out to you to do maybe quarterly payroll reviews. If you've hired or fired or have big plans throughout the year, they should know about that. You don't want to wait for year-end surprises. Document everything, of course. Contractor, certificates of insurance, class code, payroll changes. You just want to stay on top of what your actual payroll and employment situation is versus the estimates that often go into these policies. And of course, you can always ask your broker for help categorizing these kind of tricky roles where you might have a hybrid employee and have them categorized at a lower class code. So workers' comp really just isn't a line item. It's a risk strategy. If you ever want help reviewing your workers' compensation policy, understanding an audit, or need coverage fast, contact myself at Igloo Insurance. Our information's below. We'll catch you in the next video. Thank you so much.